All right, good morning again, and welcome back to the discussions uh, session. It is 9 a.m. Eastern now, and I think after about 1 hour or so, there would be some fundamental triggers, so please watch out for that. Let's continue the practical discussions on the trends. We have touch based with the signals, support and resistance. Also, we discussed about trends yesterday, and we concluded how to trade an uptrend, then A, B, C, D format. I'll just brush up quickly, just a couple of minutes. That is a rising trend, market making higher highs and higher lows. A simplified version to define this trend and to be able to trade that trend is to label ABCDs and continue repeating them. You start from the lowest low on a particular time frame where you are watching. Depends upon the time frame where you want to trade as well. I mean, it's an intraday kind of a trader, or intraday, or just a long term. So you got A, B, C, D. Just remember, C does not go below A. C should not go below A, and D would be printed way above your B. Then turn your C into A, D into B. Honestly, this is the most simplified version I've ever known to trade or to identify a particular trend up or down. There can be only two. The third one would be sideways. That's a different question. Since last 2 years, I'm not using this technique much, but believe it or not, when I get stuck with the wave principle somewhere, because I've not officially taken the level 2, I've just cleared the level 1. I'm just working on clearing the level 2 as well. So sometimes I get stuck, and that time uh, the simple, conventional yet effective technique comes to my rescue. This is what is about technical analysis. It's not about what you know, or how much you know makes you a successful trader or an analyst. Exactly, if you know the right thing, if you can simplify the chart. That's what I believe in my learning experience till now. One who can simplify the chart, because it's it's going to be produced in a very complex manner sometimes. All right, so keep on plotting your ABCDs like what I did right now until you get your last boundary. Then spread across your trend lines, the immediate one and the intermediary one, right? Then look out the first or the last AB boundary. Find out your C. Logically, that C would appear at a trend line or past resistance, turn support, or Fibonacci ratios, and then a candlestick pattern to buy. Hit the buy button and go along for an extension. Fibonacci we'll be touching upon very soon. But this is the way principle: buy at C, sell at D for an up rising market, and exactly the reverse for a dropping market. Right, let us spend a few minutes on let's take a I'm not going to take a huge trend for now to understand, for the understanding purpose. Slow steps and then bigger steps. All right, let's do it. See, right now at this point in time, this chart is complete from, let's say, 1.1548 to 1.2081. So if you are to label this chart right now as a whole, what would you do and how would you draw your lines? Just a few seconds can you spend on your own. What would you do and how would you plot? Okay, let's do it once together as a whole. Okay, this chart is already done. So if I start from the lowest point, I would plot this as A, and then you can plot this as B, but I would prefer another high. Why? Because the C point has almost met, alright, the previous support, and as a rule C doesn't go below your A. If I plot B here, let's say A, B, C and D, then your C becomes A, D becomes B. Let's do that. Let's I'm doing it in lower alphabets. Then C becomes A, D becomes your B. Now that C was a bit dicey one. It's almost equal, not exactly by pip to pip, but it's almost done by just one pip. So even if you, that's technically not wrong if you plot C here and D there, but with an overall structure, to simplify the entire chart, you would say safely A, B, and then a C here. Please remember there are two ways to find out the waves. One is the ABCD, which is absolute the wave theory, and the other one is putting Fibonacci to use. We will also come to that point at maybe today or tomorrow. And once we are done with Fibonacci ratios, I mean entry and exit points will also be clear. Right now we are more focused on an entry point, right? Okay, this is the entire structure that you would prefer to simplify the chart in front of you, in front of your screens of 7th of November 2017 onward. That's a 4-hour time frame. We will touch base with the time frame some times later after the discussions of the Fibonacci ratios. Now let's do a trend line. The easiest trend line that you want to start off with is the external trend line. Just catch the lowest point here and connect all possible lows in such a way that you're not cutting any candle. I mean, if you do the trend line like this, at least for now, after this chart is prepared, would be invalid. It was valid for a while earlier, but now it is invalid. That is the external line. For the internal line, you might want to zoom in, and find out the recent wave, that is ABCD, because okay, before doing that, let us now go a bit inside each wave. The analogy that you need to understand here is very simple. Each bigger wave is prepared by a number of smaller waves. All right. How do you come to that conclusion? Let us do it together. I'm going to hide a few candles here, and I'm going to expand. Is that okay? All right. All right. I would want you to see this view now. Okay. Let's say we are beginning, or let's say we are somewhere here or there. Okay. So what would be the concluded story till this point? You would say that the price was dropping earlier on, and then by all means you might have plotted an A B C D, or an earlier A B C D somewhere here, and then you would say that okay, this one is my first resistance, R1, and that was my second resistance, R2. From here, you might also have drawn a trend line, maybe a small trend line connecting the two resistances, like that. Alright, let's remove the other line. Right, and then you might want to count, so begin counting waves from the lowest point here. Start off from A. I'll use small A, and then there was a B, slight corrective drop C, and an extension or straight away D. Not necessary it will take the first resistance. Most of the time it does. Alright, when it does, you know that the first resistance is taken almost, and then you can expect a drop from there on. Here in this case it was almost done, but don't be adamant, don't be so strict with. You'll have to be flexible in understanding what the story is being presented to us. Okay, we fairly know that there's an A, B, C, D here. Alright, let's continue the story. A, B, and there was C and D. Alright, and again C turns into A, B, C, and D. Maybe you would also want to know how we would have traded this chart. I mean, there is a significant boundary which can be worked upon here, but we've not done Fibonacci ratios. Let's just do it for the sake of understanding. All right, we will discuss Fibonacci in a separate session altogether. If I just spread an ratio here, what can you see? I mean, there is no trend line as such, but there is at least one Fibonacci ratio and a morning star. At least two criteria out of the four are matching here. And if you would have done the trend line as well until this point, right? We don't know this. There's a fill in the blank here. Only until this point. How would you draw the trend line? You would have connected these two lows, I presume. Okay. Let me draw a trend line, and you tell me if it is correct or not. Please remember, the chart is from 7th November towards 21st November. By any chance, I'm using net dania, so if you want to be with me, you can open your charts along with what practice we are doing here. Let's say we draw a trend line here. I will connect those 2 points. Is it okay? The chart is from 7th November to 21st November 2007. Is this trend line? Does this seem to be okay? I have connected two dots and starting from the lowest point, and I have not cut any candle also. Do you think it's okay? If you said it is okay, actually there was some intentional error committed here. You don't have to cut any candle between the lowest and the highest point of that particular chart. I precisely said the chart is between 7th November and 21st November. The high point is here and the lowest point is there. So we need to just take care that between these 2 points we are not cutting candles, all right? And then connect all or any possible lows in between. Here you go. There is all possibility for a cut of candlesticks on the right hand side of the high which is formed, and that will be always be there. That will be always be there. Why? Because you cannot always get a kiss on the trend line and bounce. It will test the trend line. It will maybe not break the trend line, but it will test the trend line, and while testing it, it might drop lower. And it might give us a feeling that it's breaking below, all right, but this is not a break. We will discuss what is a break later on, okay? But do you see ABC, a morning star which you could have bought, and your stop loss would have gone below 1.1640. Right, and an extension, when we just do an extension, you just have to spread your Fibonacci ratios the other way around on the extension side. Just run your mouse the other way around, and there you are, the targets 1945 and what there was another target 1998. Both have been met right now. All right, so that was a typical way you would have traded this chart. From let's reconfirm the date. Okay, now let's say this chart is finished now. Okay, we have this blank which is filled. Do you think any change I need to make here? Let's say we did A, B, C, D, correct, then A, B, C, D, okay, A, B, C, D, okay. Do you need I need to change anything? One or two things? Yes, two things we need to change here. We need to bring about the recent AB boundary. C turns into A and D turns into B. And any other thing? Now the new high is in place at 1959. Don't need to cut candles between the lowest and the highest point. So slight adjustment on the trend line. Bring it back forward on the line, this point. So you're ready. So a short-term uptrend was seen there, and then what happened? Let's move the market on the right side. That point might be a buy point. We could have bought here with a stop there, right? But market had different intentions. It broke the trend line here, and after breaking, this is a different topic altogether, but I don't want to make matters complex right now. After breaking, it has taken support of the other boundary which was worked upon. So when the line breaks, all right, when the line broke here, what you could have done is this: small A, B, C, D, 1, 2 and 3 waves, three ABCDs, you would have changed it to one capital AB, okay? Because when a line breaks, that doesn't indicate that the trend is changing. You would want to take a measured approach that, okay, there are several small AB boundaries, maybe we've got a big AB to work upon, and maybe that AB is being retraced. This is a different topic altogether, but just for the sake of your understanding, and the continuity is there. So what happened? Let's see. That drop actually retraced almost towards the 61.8% and then began rallying again. So now, how many trends did you monitor, brothers, over here? One small trend was an intermediary uptrend, almost about almost about 400 pips. Then there was a counter trend move, an intermediary counter trend move. Let me remove the Fibonacci. Counter trends are 1 ABCD, and then again from 1717 we again began a new trend which was up. How do you label this? Very simple. A, B, C, potential D there, C turns into A. You're going to face a different theory altogether when we begin discussing the wave principle, but believe it or not, if you can only stick to any one that you're comfortable to, it could be an A, B, C, D, or it could be the wave principle and different patterns forming there. Only if you're comfortable, otherwise an A, B, C, D is you'll always find a solution even by a simple A, B, C, D. I'm sorry, there was a first stop here, intermediate stop here, and again I will change my A point to be practically, I'm going to make this as my A, because there is a low here, and I'm going to make a B, and then I'm going to make a C here, and I'm going to make a D there. All right. So what happens now? There are three different waves that you saw. First was the up wave, the second was an intermediary down wave, the third is again an up wave, and the trend line neatly done here, and that is your internal trend line. We will touch upon the significance of the trend line in some other session. What happens when the internal breaks and what happens when the external breaks. So right now prices are testing or bouncing from the internal trend line, so it's not a good idea to do or mess around with this. But if it breaks completely and breaks the support here, that is what we discussed in one of both our live sessions as well. We want to allow markets to break lower and also to take that support out at 1.1984. After that, we have a case where bears would have come into play. They have scored they made a low, right? So they would pull back. After the pullback is done, we would enter short somewhere around 2030. All right. So So that was a small understanding or a sweet understanding of how to use your ABCDs, and we are going to mix this up with the Fibonacci ratios tomorrow, and that would mostly sum up the trading style. Now, then we'll tune up with the time zones. I mean, we have not discussed about the time zones yet. What is the significance of both the dailies and the 4 hourlies, the hourlies? Why and when should you go there? All right. So we'll tune it up after Fibonacci, and then we're almost done. All right. So let's bring the session to a pause now, brothers and sisters, and I hope that it's all going well. If you want, you can send your comments in or questions that you have any. And don't forget to subscribe. If you're liking it, press the like button and don't forget to share with others. That is what is very important. I mean, and it does good to us, all of us. All right. So I'll be back again tomorrow around 8:30 with the Indian version on Nifty and etc. But for the international stuff, tomorrow UK times at 2:30 a.m. Eastern. Until then, good luck to your trades. Watch out for the trigger coming out maybe after about 30 minutes or so. And for any trade updates, watch out for your Telegram channels as well. Right? And take care and God bless, brothers. Thank you.